Hey traders, Nick looking at Amazon. Today is 12/28. Bad market day. After a bad market day, the selling was concentrated heaviest in the Nasdaq first, but then it dragged everything down. The VIX went red, went green. I'm just setting the mood for the discussion of Amazon. The VIX went green, red, and green, but it's not very green, and I see signs of risk appetite coming back. In other words, the VIX number being high or green contradicts the fact that a lot of the perceived crap stocks, like Tesla these days, it is perceived hideous, right? It can't find footing. They were green. Maybe a dead cat bounce, maybe not. So I will leave room for interpretation for the next couple of days to get more clues. The Bears were in charge today. The Bulls had right here the opportunity to take the reins, and they did, but then they let it go, and they closed at the lows, if not at new lows. So if you look at Apple was cracked into its low and closed on the very low. You see that? Amazon did not. Microsoft did the same. So the two strongest ones on my screen out of the mega caps, I didn't look at Meta, were Tesla and this one. So Tesla did really well, relatively speaking. But of course, it's down 40% in 28 days or whatever. So you could say that it's already lost a lot of fat, which is the point of this video. By the way, speaking of which, if you do like this video, give it a like. I don't read minds. Give me a carrot to go off of so I can make more videos. And if you have issue, we can discuss it in the comments. That's why they're there. Okay, so Amazon has lost a lot of fat from the all-time highs, which were incredibly high. But it's lost so much more than all of its brothers and sisters that it's weird. Okay, so let's zoom out so I can illustrate. So this is a daily chart. The other one was like 5 minutes. And this is a whole year. It can't find footing. So I would anticipate rallies to be sold. All right, so in order to gauge where we are, I have to expand the view to 5 years. And guess what this moment in time was? This was the pandemic panic low. At this stage in 2020, the markets were at their lowest because we were facing a global shutdown that lasted months and months and an unknown virus that was supposedly out of control back then. And we are in the same scenario here. This doesn't make logical sense. This didn't either, but this is overkill. So it was overkill over here, overkill over here. So if you look at Apple, Apple is still well above this point. Tesla, way above this point. So this one in relation to, say, Apple, this is the pandemic start. This is the pandemic low. Apple is still here, which tells me that Apple has risk to drop in 2 digits. I know it's sacrilege. Nobody can believe it. I said the same thing about Tesla. It came within $12 of it this week. So it's not a forecast, but Apple needs to come back to 135. Okay, go back to the point. Nick, this is discussion about Amazon. I was just showing you relative weakness in Amazon, which is building relative value in Amazon because their sales are not decimated. They're lower than here, fine, but they're not decimated. Okay, the second lower point comes from, guess what that is? This is the flash crash, not flash crash. This is the crash from Powell in 2018. He made a comment about raising rates on cruise control. The market said, no, you're not, and they crashed into Christmas. And then he said, okay, I will restart the QE. We are, this is to give you relativity. World closed for business, virus on the loose, Powell. So we are here. There's not a lot of fat to lose. If the markets were to rally, this one should have a springboard effect. I also believe that it may deliver on profitability. Let me rephrase. They may tighten the screws on spending. That's a better way of putting it. And that's the one beef that everybody has with it. But fundamentally, this thing is dirt cheap from the standpoint of, look at the sales line. annual sales growth is incredible. On the quarterly, it tapered off, but it's still an incredibly fast-growing machine. Very, very healthy from all aspects. I know I'm going to have somebody take issue with that statement. Oh, they lose so much money. Okay. Then short it. All right. So statements. Look, growth rate is slowing down, but it's still 2 digits. This is quarter over quarter. And they're rolling over tough comps. Gross profit also still growing. Net income, who cares? But let's go with net income. Where is it? Net income, $3 billion. Let's go on a yearly, so it's a better look, so there's no seasonalities. Where are you? There you are. So the net income, look at it, 10 times bigger than whatever that year that was. 2017. 10 times bigger than 2017. In 5 years, they grew the bottom line 10 times. Okay, for that, how much premium are you paying? Let's go to statistics. Forget the PE. This is not a PE measure company. What? Price to earnings. Nobody looks at profitability for a high growth company. They look at price to sales, a PEG ratio of sorts. You don't look at, like for banks, you look at price to book. For boring companies that don't grow anymore, like IBM, you probably would evaluate price to earnings. But for a company that can't stop growing, you judge it by something relative to its sales, which is price to sales. I don't think it's ever been this cheap before. So this number is the price of the stock relative to how much money it brings a year. So if you're buying its shares right now, you're giving it only 1.7 years worth of sales credits. I got to tell you, this number is probably, for AMD, it's like 18 to give you a relativity. 18 for AMD. No, sorry, AMD is about 5. NVIDIA about 18. Apple is probably about 5. So this is literally 3 to 4 to 5 to 6 to 8 times cheaper than all the mega caps. It's pretty cheap from that perspective. Some people take issue to that, but this is the realistic one, from my opinion. So on the yearly basis, cash from operations, $40 billion last year, 2021, sorry. On a quarterly basis, last quarter was 11.5, 9, minus 3, 22. So pretty impressive performance. There's no issue with it fundamentally. A newer CEO, unproven, but I'll give him the benefit of the doubt. Short term, there's nothing to look at. I usually drill down to 15 minutes or whatever. You're going to have to go to 5 minutes and say today was a washout moment. The market was completely on its heels. And Amazon was one of the ones that actually did not make a lower low into the close. Green shoots, but 4 hours is not going to make a turnaround. The turnaround will be gauged on a longer time frame, and unfortunately, because support is this old, you can't rely on it 100%. So it is not surgical. All I can tell you is going into 80, it has a lot of support, but support is scattered. So this whole zone is supportive. So how do I deal with this? I take a position that is partial. I don't take all in, leaving room to add later. What kind? I don't want time on the clock. So if I buy calls, it makes it super profitable if I nail it. But if I don't, then those calls will die pretty quickly. So I would buy shares and only like a 20% allotment. I would sell puts to own shares in the 60s out in time. I would sell puts and buy calls. This way, my out-of-pocket expense is not so big. And I kind of hedge time. So time is working against me on the bought calls. Time is working for me on the sold puts. So it kind of evens out the formula. No one should ever sell puts unless they want to own shares. And a lot of people say, I don't mind. And then you get the, oh my gosh, I'm in trouble. I sold put. Well, you're not in trouble. You're getting the stock you wanted to buy at the price you asked to buy it at. So these are not recommendations across the board. These are my thoughts. I'm thinking out loud here. Okay. So fundamentally, good company. Technically, disaster. Support, not recent, so not totally reliable. Here's a statement that's 100% reliable in my opinion. If the markets are higher in the future, Amazon is among the winners. I have no doubt in my mind. So Amazon is not going to crash all by itself, given what we know about it now. All right, this video is a little bit longer than I wanted, but I think it drives home the whole point about Amazon.